Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Hello and welcome to Google Trends Hub's channel. Today we're talking about the latest news that's got investors feeling the heat. President Trump's new tariffs are sweeping the U.S. stock market, causing major AI stocks like Apple, Meta, and Alphabet to take a hit. Imagine you're walking into a room where everyone knows each other, but suddenly, someone announces that they're all going to have to pay more for their favorite foods. Sounds weird, right? That's basically what just happened with tariffs on nearly every nation, starting from a minimum base rate of 10% and rising. To figure out how much each country should impose on U.S. goods, Trump used a clever trick. He took each country's trade surplus with the U.S., divided it by its total exports to the U.S., and that's the tariff amount. But here's the thing, even countries that import more from the U.S. than they export to it will still be hit with 10% tariffs. It's like a big game of tariffs, where everyone's trying to figure out who's going to get hurt the most. For example, let's look at China. Using Trump's calculation method, China would impose hidden tariffs of 67% on U.S. imports, meaning the new tariff on Chinese imports will be around 34%. That's a pretty big number. Now, you might wonder what this means for companies like Apple, Meta, and Alphabet. Well, they're all heavily reliant on digital advertising to make their revenue streams grow. Tariffs and a slower economy could really cramp that style. According to experts at Oppenheimer, tariffs could impact Meta's revenues by 16% and Alphabet's revenues by 15%. That's a significant chunk of change for these two tech giants. But here's the thing. If you can take a long-term view and stomach some volatility, these stocks might be worth looking into. After Thursday's sell-off, Apple trades at around 28 times forward earnings, Meta is at 21.4 times forward earnings, and Alphabet has sunk below 17 times forward earnings. That's more than 20% lower than their 52-week highs. It's likely to be a wild ride for a while, but I think these megacaps are going nowhere fast. They're still dominant players in the tech and artificial intelligence sector, and they'll likely continue to lead the way. So there you have it, the latest on Trump's tariffs and how they're affecting major AI stocks like Apple, Meta, and Alphabet. Make sure to check out Google Trends Hub for more stock recommendations, portfolio guidance, and insights from our experts. We'll be back with more after this break.